Hey everyone, Scott Cunningham, aka Scotty Business. Today we're going to be talking about when should you actually take your crypto profits, meaning when do you actually lock in those gains by actually selling and taking those profits. What is the best time? What are some of the best methods? Different levels of risk for different levels of investing. We're going to go through all of that today, and then also just talk about what I do and the different strategies that are available. So, getting right into it, the main thing here is risk. Everything else comes down to risk, or all the things that factor in come back to this main principle here, right? So a good example to explain this is like if you're day trading, for example. It's really hard for me to find good stats on this, but it could be anywhere from like 80 to 90% of people fail day trading in the first year. At least for stocks. I'm not sure what it is for crypto, but in general, people who are trying to time the market typically end up, for the most part, the majority of those people will end up being the people who are making those, really small percentage of people who are doing the same thing. They're getting rich off of the majority of people who don't know what they're doing, right? And I've seen a lot of people get into investing in crypto or stocks in the past 6 months because there's a lot of opportunity. People aren't doing much. And I see a lot of people just starting off with day trading. Like they just get in, they're trying to gamble basically. And it's definitely not a good way to be investing, especially to start off. But we're not talking about that today. We're talking about when should you actually get those profits out. The point of focusing on day trading here is that is probably one of the riskiest ways you can trade. There's also options and other things, but it is one of the methods of trading that is the most risky. So what are some other methods? Well, you can buy and then sell after a short gain and then, make some profits. And that's a pretty easy way to make profits given you're investing in something good. Or you could hold, or you could wait for a specific price point or multiplier of the value when you bought it and then sell. So those are a few different ways that you could approach it. Obviously, holding your coin long term is probably the safest way to invest. But then again, you have to consider what are you investing in, right? So if you're investing in the top 50 currencies, cryptocurrencies, that's probably a safe bet compared to, the top 5,000, which you're getting into the territory of coins that could be delisted at any time from an exchange, and then you can't sell them at all. Or, in the top like 200 is generally like altcoins. So, I mean, obviously you can look for new projects and stuff, but it's going to be really risky if you're investing in something that can't be sold back and you're waiting for it to be listed or something, or it's, doing very poorly, doesn't have a lot of volume, and it's on like one exchange. If it gets delisted, then you're screwed, right? So I advise in investing in something that, is very liquid, meaning you can trade it on a lot of exchanges and it's very easy to trade back and forth, and there's volume. People are actually trading it. There's a lot of different things that go into the token fundamentals. If that's kind of confusing or it's too much to actually do all that research, you should just stick to some of the more well-known top traded cryptocurrencies. It's probably a safer bet. Again, none of this is financial advice, but that's probably the way you want to do it. Also, I forgot to mention, this is a library first video, meaning that this will show up on library before it'll show up anywhere else, at least an hour ahead of all my other posts on all the other platforms. So if you do want to see this video first going forward, and any video that I post, it will always show up on library first. So if you want to see it first, you got to watch it there. Anyways, going forward, so the different coins that you're investing in are going to make a big difference. If you want to actually get into the fundamentals of the tokens or the cryptocurrencies and the tokenomics, that's highly recommended. You should be researching things before you invest in them. But if you're not going to bother to do that, you're really just better off sticking to the main well-known coins. Because there's also so many things that go into token fundamentals, like Do you want a coin that is scarce like Bitcoin, or do you want a coin that has, a lot of development like Ethereum, or are you looking for a coin maybe that's deflationary? So they start with a certain amount and then they're slowly burning coins over time to make it more valuable. There's a lot of different ways that coins are sort of built and the way that they work. And there's some coins that are proof of mining, and then there's from proof of work rather. And then there's coins that are, proof of stake or delegated proof of stake. There's all these different consensus models and ways that crypto have value. So obviously it's important to look at all of that. But in terms of actually getting your gains, let's kind of get back to that. So we've talked about the fundamentals, the coins you're investing in, and then now the actual strategy for when should you take those profits. So at the very beginning, I mentioned it's obviously much riskier to be trying to get your profits every day from day trading because you're trying to time the market. And again, if you were doing that and you were good at it, you probably aren't even watching this video. So the people who are watching this video are obviously the people who are maybe considering day trading or not day trading right now, or they just got into it and then they're kind of looking for information. Again, I don't think you should be day trading. You should really be looking into coins that you think are really valuable and holding them over time. Or as I mentioned originally, if they go up a little bit in price and you're just looking for a small gain, then that's a really, really easy way to do that. You probably wouldn't have to hold for a very long time to see that. If you're looking at a specific price target or an equity or a multiplier where you're I'm only going to sell if it goes 2x or 3x or 5x, that's another way to do it. The safest way, in my opinion, there's two main things that you want to do, right? And this is what I do. So first, once my coin has gone up a significant amount, because for the most part, I'm holding the majority of my coins indefinitely. But when it comes to a coin that has a lot of growth, I don't know, Bitcoin or Ethereum, those coins I just hold and that's it. I never really, take anything out or sell it. I'm not trying to time that. I think there's a lot of growth to be had there, and we just had the Bitcoin halving, so I'm not planning on selling that for quite some time. Now, when we're talking about, other coins I don't know, something I'm investing in for passive income like FET or Algorand or ARPA, these types of coins are coins that I'm really holding them for passive income, and I intend to hold them for a long time. But once they reach a certain point where they've 2x'd or 3x'd or whatever, I will sell out the original investment. So I invest in everything typically using my Ethereum. And then once I reach my original investment and I've doubled that or tripled that, then I take back the original investment, put it back into Ethereum, and then I've still got my original 10 Ethereum that I started off with. That way I can look for new projects to invest in, and I can keep building my portfolio without actually losing money, right? If you do it where you're selling out your original investment each time and then the rest you're just allowing to continue to make money and do whatever they do, then no matter what, you can't lose money. So it would be like this, right? Say I put $100 into FET. FET doubles in value. I sell half of it. I've got my $100 back, and I still have $100 of FET. Now, if FET goes down half in value, I've still made $50. If it doubles in value, I've made $200. No matter what happens to FET, even if it goes to zero, I haven't lost any money. So this way, you're kind of locking in your safety so that you're not losing money and you can only gain money after this point. Then, if you'd like to do sort of incremental taking of your gains, which is what I suggest and what a lot of people do, is as you reach specific price points, so like 3x, 5x, 10x, 15x, you're taking a percentage of your coins every time so that you're not just selling it all out and then, it goes way, way up, and then you're like, oh, damn, I missed out. It's better if you take small amounts, or not even small. You could start off with like half, and then half of the half, and then half of the half, and you keep just taking 50% every time, meaning that you'll always have something in there. And if it continues to go up in value, then it'll always be, a pretty decent value, but you'll still be able to get those gains from the rising price. And this way, you're ensuring that you're going to get your gains. Obviously, people might argue, yeah, but Bitcoin is going to be worth $50,000 in 2 years or whatever. Yeah, I mean, like I said at the beginning, for the most part, I just hold my Bitcoin. But to be fair, if Bitcoin goes up to 25,000, I'm absolutely going to sell, maybe 25% of it or something like that. I think it's foolish to not at least somewhat capitalize on a huge gain, because that would be more than 2x. And it just makes sense. I mean, because then if it goes back down, you're like, wow, I missed out. And the good thing about taking incremental gains is if it does go back down, and this isn't day trading, but if it does go back down and you're really confident in that coin, you can then buy back in so that the next time it goes up, you've actually got more of that coin. And instead of locking in your gains, you're necessarily locking in getting more of that crypto. So you're not necessarily getting gains per se, because you could buy it and then it'll go down and then you lose money. But that is a good way to continue building your portfolio. And in a way, you could say that's kind of day trading. But if you're selling off incrementally and then buying back incrementally when there's dips, I mean, that's just good sense. I wouldn't really say that's day trading. It really depends the types of coins you're doing that for. And I mean, again, this all comes back to how much time do you actually have to dedicate to this kind of stuff. And are you trying to invest passively or actively? I'm kind of going out on a tangent here for all this different stuff around investing. The main focus is really on when to take your gains. And again, I still think and recommend, and this is what I do, the best methods are getting your original investment back and then taking out incrementally as it appreciates in value. So I think that is the best way to do it. Again, this is not financial advice, but this is probably the safest way you can invest, because again, doing this, as long as you're investing in good coins that will eventually go up and allow you to get your original investment back, you're not investing in like awful coins that are just going down in value, you should be able to get your investment back. And then from there, it's just free money. Anything that you get is just profit. So there's no way to lose in that strategy unless you invest in a really bad coin and it goes down in value, or you just invest at a bad time, right? Because you could invest when it's going way up and then it kind of dips a little bit right after. I would also say, just when you are investing, try not to invest when everyone's investing. Like, don't see a huge rise in the price and then buy right at the top. That's you giving money to the people who bought at the low, because eventually there'll be a sell-off where people want to lock in their gains, because that's always going to happen. I guess it's also important to touch on this, because people do want to lock in their gains. Whenever there is a price rise in a crypto, it's natural after some point that it's going to have a pullback and people are going to sell and get those gains. So never think that a coin is just always going to go up. I mean, obviously there's bullish markets and there's bearish markets. But if you're really keen on ensuring that you get those gains, you got to make sure you do it before it starts to pull back and drops. But again, people don't have the time to be monitoring the market, constantly. A great tool / resource that I use is called Blockfolio. And on that, I'm able to add all of my cryptocurrencies and then add alerts. And then I get alerts when there's price changes. So I'm able to really stay on top of the market. There's a huge gain in something, I can sell a little bit of it. There's a huge drop in something, and I really believe in that crypto, then I might buy in. So I highly, highly recommend Blockfolio. It is a game changer for tracking your entire crypto portfolio. And it's just so useful to have that information. And I would consider it just essential to my trading strategy. I feel like I would be very lost without Blockfolio, so highly recommended. And it's not even like a sponsored thing because it's free, so go and check it out, and there's no ads or anything like that. So that's pretty much everything, you guys. It all comes back down to risk. There is no one strategy fits all. There's if someone's telling you that one specific strategy is better than another strategy, I would be hesitant of that. Though again, my strategy that I've recommended to you is the safe strategy. You might not get as much rewards from it, but if you're concerned about your profits, and you're stressing about it, then you probably want to go with the safer route. I will always take the safer investing route. I mean, look, we're already investing in cryptocurrency, so it's already pretty risky. No point in adding any more risk on top of that. So that's just the way that I've approached investing, because even with my stocks, I typically tend to sell out of my original investments so that I can continue investing in other stocks and growing my portfolio. Again, some people might disagree with this, right? Because some people might say you shouldn't be selling out of good performing stocks, because then you're losing out on future gains. But I would argue that by locking in my gains, I ensure that I am getting those gains. So that way, no matter what, I am going up in value. Whereas the other way, you may or may not, but there's more upside and there's more downside. So it all depends on what is your risk that you're what's the risk tolerance that you have? How risk averse are you? That should really impact all the other decisions you make around investing in general, let alone just when to take your profits. So it's really just about knowing your own level of risk tolerance and what you can deal with. Because again, as I've pointed out, the way that I invest is very, very unemotional, not stressful. I don't, it doesn't concern me much. I don't get anxious about it. The way that I'm doing it, it feels like it's probably one of the safest ways that you can invest. I'm sure there's obviously safer ways. I mean, if you want to go into bonds and stuff like that. But in terms of crypto and my dividend portfolio, I feel like this is probably one of the safer ways to be doing this. This is, again, just what I'm doing. Obviously, do your own research. This isn't financial advice as to what you should do. This is just what I'm doing, and you can feel free to learn from this and do as you will with your own portfolio. Anyways, let me know, how are you guys taking your gains? What is your risk aversion and how does that kind of factor into your investing strategy? I'd love to hear all that from you guys. And what do you think are the major differences between day trading and holding, and what's the difference of risk? And if anyone has any stats on the success of day trading in crypto and or stocks, it's so hard to find that information. I would love to see that. And I'm sure other people would be interested in that because, again, the main concept of day trading is that the small amount of people are taking the money from the people who are, messing up, which is the majority of people. So it's a small amount of people taking the majority amount of people's money in the day trading game because it's a risky game. And it's borderline gambling. There's people who are professional gamblers and live off of gambling, and there's people who are professional day traders and live off of day trading. So if you can handle it, do what you want to do. But again, I will always shy away from day trading, and I avoid, for the most part, growth crypto and growth stocks. I'm more interested in fundamentals rather than speculation. So, let me know what you guys are doing, though. I'm really curious to hear how you invest and how you take profits. Let me know in the comments below. Thanks for watching this video to the very end. Since you did, make sure to give it a like and comment #1ham in the comments below, so that way I know that you watched the whole video. Also, please subscribe to this channel and feel free to follow me anywhere under at Scott C Business. I'm basically on every platform. You can also share this with someone else who might gain value from it, and that would be very helpful and impactful to helping my channel grow as well. If you'd like to support me more directly, you can also donate to scottcbusiness.eth or scottcbusiness.crypto listed below. Thank you so much for your support and for watching this video. I'm Scott Cunningham, aka Scott C Business, signing off. Cheers.